The economy, of course, as we've told you, growing at a very strong pace in the first quarter. GDP, 3.2%. That was well above what many economists had expected. Joining us now with what you might expect would be a very positive reaction, I would assume, National Economic Council Director Larry Kudlow. Larry, nice to see you this morning.
Morning, David. How are you? Morning, Jimmy. How are you?
Hey, buddy.
We're good.
I think say that.
We're well. Let's get into the nuts and bolts. You know, it's kind of, Rick Santelli earlier was talking about the 10-year still 2.5 or below that in terms of the yield. Somewhat surprising reaction this morning, Larry. Maybe people are already looking through this number. You know, give me your take in terms of the bond market reaction, in terms of, well, consumer spending was up 1.2%, but maybe business investment slowed because the market, perhaps somewhat unexpectedly, kind of just taking this and moving on.
Well, look, it's a blowout number, and I'll just say that President Trump's policies are rebuilding the economy. And actually, the prosperity cycle we're in is gaining momentum. Not losing it, it's gaining momentum. So I think that's extremely positive. Let me also add, the inflation rate continues to slip lower and lower. And actually, by the Fed's own measure, the PCE deflator for inflation has dropped from 2.2% last summer to 1.4% this winter. Even according to the Fed's own spokespeople, from the chairman on down, that could open the door to a target rate reduction in the months ahead. The Fed is independent. I'm just expressing my own view. The president happens to agree with that view. So I'll just put that in there.
How can you be talking about a rate cut after a 3.2% GDP print for the first quarter?
Well, because, look, this is, again, by the Fed's own lights, David. They are now targeting inflation, which is coming in way below their own benchmark metric of 2%. So I'm just saying, look, here's a point.
Supply side. They do have a dual mandate, Larry. They do have a dual mandate.
Right. But it's not growth that we worry about. As inflation has come down, growth is actually improving, or at least sustaining a 3% growth rate. So I basically like that story. Look, supply-side tax cuts, deregulation, opening the energy sector, pro-growth trade reform, that's improving the supply side, the production and investment side of the economy. One stat that's very interesting from the durable goods yesterday, from December through March, the core capital goods spending, core CapEx as it's called, is actually growing at a 10% annual rate. That's a terrific pickup. And at the same time, we saw a huge retail sales number in April. So what I'm saying is we are clicking on all cylinders. The inflation rate is coming down. The Federal Reserve will be looking at that. I know old style analysis says fast growth means higher inflation. You know, I've never bought into that. I still do not buy into that. What you're getting now is more goods and more production and more output, 3.2% in Q1. That actually is chasing less money, and so therefore the inflation rate's coming off. I think that's very significant.
Larry, great to see you. You taught me a great deal in the time that we had Kudlow and Kramer. And one of them is when you get great numbers, don't look through them. Great numbers are great numbers. They put people to work. They make every worker do much better. But they also do something else internationally that I need you to tell me where we stand. Doesn't this strong GDP number give us an upper hand against the Chinese, who are trying to tell us that look, you need us more than we need you? Isn't a 3+ GDP number the end of that narrative?
I agree. I think it's a key point. We're negotiating with China. As you know, we've made a lot of progress, but the deal's not done. Secretary Mnuchin and Ambassador Lighthizer are going over there next week. After that, Liu He, the China's top trade negotiator, is coming here the following week. I hope additional progress will be made. I'm cautiously optimistic about the outcome for a deal. But your point is well taken. China's economy is slumping and has been for quite some time. The U.S. economy, as I say, is in this prosperity cycle with no end in sight. So we believe that does give us some leverage, if you will. But we believe also that China may be open to a lot of good trade reforms. We'll see. I don't want to make a clear forecast. As I say, headway looks pretty good. But, you know, I guess and I think the president would agree with this, they need a good deal even more than we need a good deal. But we would like a deal that works for both countries and increases economic growth for both countries and hence around the world. So let's keep an open mind. I think we're moving in the right direction on that one.
All right.
It's
Larry,
interesting. Yeah.
Ooh, can I just quickly, Larry made a point that I think is very valuable. There are a lot of lies being told that the money that they saved from the tax cut just went to buying back stock. Larry, you and I both know that's not true. We listen to conference call after conference call. And what's happened is that people are being put to work, and more important, there is a tremendous spending on capital equipment. In our country, in China, they just try to pump up the economy by printing money with companies that are, you and I know are bankrupt, that just the only way they make money is to dump in this country. Is it not true, Larry, that a sizable portion of that money went to exactly where it was supposed to go?
Yes, absolutely. I mean, you're so spot on. And, you know, the cap goods numbers are very important. That's your supply side push. That gets you more investment, more productivity. Productivity, by the way, last 12 months or so is rising, I think, 1.8%. So it's close to 2%. That's a big improvement from years past. You're getting 2% growth in employment. The job story is absolutely terrific. The wage story is terrific. I mean, all private wages are about 4.5% increase. The non-supervisory wages from the jobs reports, 3.2%. So you're getting good productivity, good job increases, mainly because capital is being invested into the economy. That's the key. And this is just the beginning. I give you my view, take it or not. It takes a while for these big companies to turn the ships around, but they are shifting now to a huge capital expansion. And that means better technology, better plants and equipment, modernization. It also means better training and reskilling, as my colleague Ivanka Trump would say, reskilling of the workforce. And the workforce is coming out of the woodwork back in, so they will be counted. And the unemployment rate probably continue to fall. I just think this is a very ideal situation.
Larry, I wanted to come back to China for a minute because it was interesting listening to you answer Jim's question. I mean, you seem to imply, you know, when Lighthizer in there and he's got his checklist, that he can go even tougher on the Chinese now with this kind of wind at the back of the U.S. economy. Is that a fair statement?
Yes, I agree. And that is our position, by the way. And we'll see this. Look, you've got sort of two areas here. And again, I'm not forecasting an outcome because the deal's not done yet. It's got to be a great deal for the U.S. But to your point, which I agree, really Jimmy's point, first, on the structural issues, we are hanging very tough. There must be enforcement. We have to shift the IP theft. We have to stop the forced transfer of technology. We have to open up the cloud there so we can use it from our production here in the United States. From the commodity standpoint, both farm and industrial, you've got to have lower tariffs and non-tariff barriers. And that's an area where our team is going to be particularly tough. We love exports. In fact, in today's report, net exports was a driver of the 3.2% GDP. That's terrific. That's a Trump policy that continues. But because of our strength, and because I think China needs to open their economy to better growth outlook, we will be strong. This number helps that a lot. We will be very aggressive in these trade talks, very aggressive.
And Larry, finally, on the subject of trade, there are those who look at the report and say, well, listen, there was an inventory build. People were trying to get ahead of potentially higher tariffs before they were sort of put off. Is there a concern or a question, at least, that trade and inventories drove higher growth than was anticipated by some, but won't be there in future quarters?
Well, look, inventories swing around, as you guys know. I think about 2/3 of the inventory build came from the auto sector, which was sluggish in recent months. Now, let me make this point. I don't think it's particularly a trade-related thing, David. Though you may be right, there may be some of that in there. It looks to us like it's mostly autos. So here's my point on this: consumer spending soared in March. Okay, you have big job growth, which means wages and incomes give consumers a lot of power. So Looking forward to the second quarter and the third quarter, I think you'll see a pickup in car sales because of the resources consumers have. I also think you're going to see a steady increase in housing. Housing is starting to rebound again. I think that's a big positive for the economy. So I think the GDP report will continue. We will stay with our 3% growth rate estimate. That's been our view all along. I know some people disagree. I respect that disagreement. But frankly, I think the prosperity cycle is intact. And frankly, I think the Trump policies are working to rebuild America. And people are getting happier and happier, David. I'm sure you're happy about this. I know Jimmy's happy about this. People like prosperity.
Larry, you always make me happy.
You know, I'm generally everybody who knows me knows I'm Mr. Happiness. I mean,
you are,
that.
man. You and I, look, I love happiness. I want America to be optimistic again. I think that's exactly where we are going. You know, numbers are numbers and GDP is GDP. But I think the morale of the country is picking up. But I do love these numbers. I just think they're beating what everybody else thinks is happening.
Well, Larry, we appreciate your sharing some time with us this morning. Thank you.
Congratulations, Larry.
My pleasure.
Larry Kudlow.
Thank you. Thank you.